So I'll be talking about break of structure, which is popularly known as BOS. And I'll be talking about other block, which is popularly known as OB. If you don't know forex terminologies, you should check other videos. I've talked about terminologies of forex in some other videos you can just check out. Alright, so break of structure is called BOS, and then other block is called OB. So that is what I will be talking about in this particular video. Okay, that is what I will be talking about in this particular video. So basically, what is break of structure? A break of structure is simply the continuation of a trend. A break of structure is simply the continuation of a trend, meaning that if we are in an uptrend, don't forget that means we are having higher highs and higher low. We are having, this is higher high, this is a high that is higher than the previous one, and this is a low that is higher than the previous low. This is higher high, this is a low, this is higher high, this is a low, okay, this is higher high, this is a low, this is higher high. This is clearly an uptrend. This is clearly an uptrend. Now, break of structure is simply the continuation of a trend. So this is an uptrend. Break of structure simply means uptrend continue forming uptrend. That is break of structure. So what do we want to expect on this trend as it's going? We want to see another low formed like this. Okay, we want to see another higher high. This is a break of structure. This is another low, this is another high, a break of structure. This is another low, this is another high, a break of structure. So you might be wondering, so what's the structure, what is it breaking or whatever? Now let's go straight into that. You can see this high right here, this first high right here. This is a zone, is a supply zone. Okay, price pulled back, not breaking this previous low. Price pulled back, giving us a demand zone, and then price pulled to the upside, breaking above this previous supply zone. So this swing that happens right here is what we call a break of structure. Basically, what we refer to as the structure is this zone right here. Okay, this is the level of the previous structure, the previous high. This is the level right here. But after this retracement and the next swing high, price took out this previous high. It breaks above the structure, the previous structure. So that is why we call it a break of structure. So if you look at the next one, it created another high and then rejected. Now, this is the structure that this high left for us. This is the structure that high left for us. But what happens? Once price did retracement here, and then the next swing high also break above the previous high. This is also a break of structure. Okay, this is also a break of structure. This is the previous structure, but the next move breaks above the previous structure. That is why we call this move a break of structure. Okay, let's look at another one again. Price left a supply zone here. This is the level of the supply zone. Okay, and then what happens? Price moves to retrace, and after the retracement there's another swing high. Okay, there's another swing high which breaks above the previous supply zone, okay, leaving another supply. This movement right here is what we call a break of structure, meaning that price breaks the previous high before turning back. This is the break of structure. So if you look at it, you can see the same thing, just like this. So this is basically what we refer to as a break of structure. Alright, this is what we basically refer to as a break of structure. And if is a downtrend scenario, okay, let's have a downtrend scenario. So let's say we have something like this. On a downtrend scenario, price break the previous high, the previous low here, price breaks it and then retrace, and then this is the recent low, price also breaks this recent low, retrace, this is the recent low, price also comes down and break the recent low, retrace, this is the recent low again, price also come down and break the recent low, retrace, this is the recent low again, price also come down and break the recent low, just like that, like that. All this move right here, it is break of structure on the sell side, meaning on a downtrend. So those are break of structure, the point at which the new move breaks the previous move. That is a break of structure. We are in a downtrend, so our break of structure will be moving to the downside. If we are in an uptrend, our break of structure will be moving to the upside. Don't forget what I call a break of structure. Break of structure is simply the continuation of a trend. So you can see the difference now. Okay, you can see the difference. In an uptrend of this scenario, this is a break of structure. The structure will be up, so once it's break, we mark this out as a break of structure. Okay, but in a downtrend, the structure will be down. This is the structure. Once the price breaks through the structure, we mark this as a break of structure. Price will retrace and then come back for another break of another structure. It is as simple as that. So this is break of structure. But we are not done, because there is another important information I would like to share with you, which is the other block on the break of structure. So let's look at something. Let's look at something real quick. Let's look at something real quick. Okay, so don't forget, we'll talk about break of structure and then other block. So break of structure is as simple as that. I'm trying to make this course as simple as possible so that you don't get confused or lost on any aspect of trading. This is basically what break of structure is. So before we move to other block, let's look at a practical scenario on the chart. Okay, now this is an uptrend. As you can see, this right here is an uptrend. Can you see? Let me use a shorter uptrend so that I'll be able to zoom out. I'll be able to zoom out the chart for you to probably see. Okay, so this is an uptrend right here. This is an uptrend right here. Now we are moving in an upward direction. Let me mark the overall trend. Mark the overall trend. From this point right, we are basically moving up. Okay, we are basically moving up here. Now, what do we call a break of structure? Let me zoom it out like this so that you can see clearly. So what do we call a break of structure? Let me look for a clearer structure. I can easily identify it, but this is not clear enough. Okay, it's not clear enough. Okay, let me use a downtrend scenario. Let me use a downtrend scenario. All right, this is a downtrend. This is a downtrend right here. So we've been moving down and down, moving down. If you are wondering how I'm using the line to identify the trend, we'll look at that in the mentorship cycle. Okay, the purpose of this video is break of structure, is to give you the necessary information. So the plan of this video is just on break of structure. We'll look at other concepts in other videos. Okay, so now we are moving downward. Don't forget what I said break of structure is: continuation of trend. Now let's move with the trend. Price swings down. Can you see? Create a low right here and then retrace. it moves back a little bit, and then the next move, this is the recent low, price moves down, breaking below the previous low. This is a break of structure. Now price retraced again, it moves up and then comes down again. You can see breaking this previous low, price moves down to this place. This is a break of structure. Price retrace to this level again, create another low right here. This is a break of structure. Price moves up again to this place and then create another low right here. This is a break of structure. From this zone right here to this current place, this is a break of structure. Okay, you can see it like that, like that, like that. Price moves again into this zone. Price moves into this zone and then also did something like this. Okay, this is a break of structure to this particular zone right here. This is a break of structure. So what are we saying? This move right here from here to this place, this is a break of structure. Can you see? From here to here, this is a break of structure. From here to here, this is a break of structure. Okay, from here again to here, this is a break of structure. So it's very simple. Break of structure will simply continue the trend of the market. If you are in a downtrend, you expect continuation of a downtrend for a break of structure, and if we are in an uptrend, you expect the continuation of trend to the upside for a break of structure. So let's look for an uptrend example. Let's look for an uptrend example. Okay, let's do 15 minutes. Let's do 15 minutes. All right, so this is an example of a break of structure of an uptrend. So let me mark out our trend right here. Let's move from here, and then we've been on the move like this. Now continuation of a trend, that is basically what break of structure is. Very, very simple. Now let's look at this move. This right here, this is a supply zone. Then price turns back and then moves up, breaking above the previous supply zone. This is a break of structure because the next move right here was higher than the previous high. This is a break of structure. Let's look at another one. This is a new supply zone that was created from this move. So this is the recent high. Price moves down and then turns back to create another high, and the high was higher than the previous high. This is a break of structure in an uptrend scenario. Okay, you can see what we are doing. If you look at the movement just like that, we have another break of structure here because this is another high that was created. Okay, and then price retrace and then move up to this place. So we have another break of structure right here, breaking structure to the upside, and then price keep creating break of structure. This is another high right here, and then price retrace to the downside and then moves up, moves and eventually break above this high, giving us another break of structure. Okay, this is basically what break of structure is, and this is the last one before we have a change of character. This is another high that was created from this move. So this is a supply zone, then price pulls back and eventually comes up to break above this high. So we have a break of structure right here as well. We have a break of structure right here as well. So I believe you understand the concept of break of structure. So very quickly, we'll be looking at order block. Okay, we'll be looking at order block right here. The second concept, we'll be looking at order block. Now if you look at the formation of break of structure, let's use a downtrend scenario. we are having something like this. Price is moving in this direction, breaking structure to the downside, turning back, breaking structure to the downside, turning back, breaking structure to the downside. Do you see this point? This point here, this point here, this point here, and this point here, where price is getting to and then turning back to the downside, is where we call the order block. Okay, because we pick our trade from another block. So if you want to sell on this particular setup, we'll be placing our sell order at this point. We'll be placing our sell order at this point, and you can see, very simple, a win trade. We'll look for another order block. This is the recent high that was created, so we place our trade at that point again. You can see that price also mitigated it and then swing down, a win trade as well. We look at another order block right here again. This is the recent high that was created. We place our sell, and then price came back, retraced into those zones. You can see price swings up, starting like this, created another block, turned back. We place our trade at that other block, price came back into it, and then sell, profit. We created a trade at this second order block, which is the supply zone right here. Price retraced into it, mitigate it, and then sell. We created another trade at this other block, price came down, retraced back into that other block, and then turned back again, win trade. Now, how do you identify those order block? Now let's go to the candle. You can see the formation. I believe you understand. Now let's go to the chart. Let's go to the chart. I will still do another video on entries, okay, on entries, where we will delve really deep into the usefulness of order block and the way we use it for entry. But I just wanted to identify basically what order block is. So let's look at 5 minutes. Let's look at 5 minutes. Now, an order block is simply the last sell candle that formed before a break of structure. You need to understand this, okay? An order block in an uptrend scenario, if price is going up in an uptrend, an order block is the last sell candle that led to a break of structure. Now let's look at an uptrend. Let's look at an uptrend, and then let's pick an information from it. Let's look at an uptrend. I want you to get the gist very well. This is 5 minutes time frame, okay? This is 5 minutes time frame right here. Let me change the time frame and then look for, okay, this is a downtrend. This is a downtrend scenario. Okay, this is a downtrend scenario. Price is moving like this. From price is moving up, then we start having a downtrend. So this is an upswing, then we start having a downward movement. This right here, this swing that was broken to the downside, we call this a change of character. Okay, let me mark this out. We call this a change of character. I won't be talking about it in this video. I'm just using it for the purpose of this video. So we are previously in an uptrend, then we have this as a change of character to the downside. So what do we need to do? We mark the last buy candle that led to the break of structure, which is the change of character, because we are just starting now. So what do? We mark, this is the swing, and then this is the last, this long blue candle is the last buy candle that formed before we have the sell move that eventually break this place. So we mark this candle like this. Okay, we mark the candle like this, and then we set our entry at this point here. We set our entry at that point, and then our stop loss, we set it at the end of this candle, but for the sake of liquidity sweep, in case they want to be sweep, we just leave a little bit gap above. Then we target next demand zone. So we can target a zone like this. We can target a zone like this. Can you see? Price did what? Let me show you something. From here, price actually sweep down. Price sweep down here, sorry. Yes, price sweep down here, breaking this low. Price sweep here, then retrace back into this place. You can see this candle. You can see this weak candle that came here. It came back to mitigate the sell orders that are formed on the last buy candle that eventually broke this place. Okay, so the price came back into this place and then turned back, giving us a break of structure. Can you see? Giving us a break of structure. Let me mark this here, then I will explain again. This is another break of structure right here. Now let's look at something. This first one is a win trade, so let me take it off, and let me take this one off too, because we've already used it. Now this place here, this is a structure like this. So it was broken. It was broken. This place was broken. Let me zoom out. Okay, this place was broken, giving us another entry right here. Don't forget, in a downtrend, the last buy candle that formed before the sell swing that led to a break of structure. So this is another buy candle right here. Okay, this is another buy candle right here. This is another buy candle. Let me zoom it out. What are we expected to do? Place our trade. We place our trade just like this. We place our trade here at the beginning of the candle. That's the normal concept. But looking at this candle, there's a lot of wick, so price is likely to run into the body. We'll talk about the use of body and candle later in the mentorship cycle. But normally you would have placed your trade here, okay, and then your stop loss will be at the end of the candle. But I always advise leave a little space higher in case of sweep, so that you don't get stopped out. So if you use normal plan, we will still not get swept out. Okay, we'll still not get swept out. But normally I would have placed my trade just like this. Okay, I will have placed my trade like this. This way I will have more risk to reward ratio, because I will be entering the price at this body. You can see there is a long rejection on this candle that we marked, but this is where the body closes. Okay, this is where the body closes. So what basically I will do is place my entry at that body, place my sell entry at that body. You can see it right there. So I'll place my entry at that place. And what did price do? Price came back to mitigate it and then give us another break of structure. Give us another break of structure. All right, so it's very simple. The last buy candle that formed before the sell swing that led to a break of structure is what we call the order block. The last buy candle that formed before the sell swing that led to a break of structure is what we call the order block. So let's look at one more example on the chart before we move on. Okay, so let's see this on this particular chart. If you look at it very well, you see that we are already moving in an uptrend. You see that we are already moving in an uptrend. Price is previously coming from here, has been coming like this, creating highs and creating everything. Okay, and then eventually this high was broken. It was broken to the upside just like this. So here we have a break of structure. This place we have a break of, a change of character rather, to the upside. Okay, looking at the formation of this concept, we have a change of character to the upside, meaning that we look for opportunity to buy. right here. As you can see, we have a recent high and then it was broken eventually. So we have a change of character right here. What do? We pick the last sell candle, just like this. This is the last sell candle that formed before the swing that led to the change of character. Okay, we pick the last sell candle that formed before the swing that led to a change of character. And if you see, price simply moved back after the change, the breakouts like this. From here, price moved back into this candle. You see this red candle here. Price moved back into this candle and then rejected, creating another high, breaking this previous high, creating another high here. It is a structure. Okay, now if you are wise, this is another opportunity. You can see this red candle here that formed here. You can see that price is already in that zone as well, but we have a break of structure here. Meaning that this sell candle here is most likely to hold, because price will keep creating higher highs and higher lows. So this price is likely to give us something like this. As it's coming down from here, price will mitigate this candle, which is it has already done, and then bounce back to create another high. It has broken previous high. It will come back to this last candle again and then create another high. It will come back to the last candle like this again and then create another high, just like that, like that. That is how we form trend. Break of structure is the continuation of trend, and order block is the last buy candle that formed before the sell swing that led to the break of structure in an uptrend. But in a downtrend, another block is the last sell candle that formed before the buy swing that led to a break of structure. It is very, very simple. I will see how I can delve deeper in other videos. So make sure you stay tuned, and then let's move to the next one.